Hey everyone, how's it going? It's Saturday morning. Go over this week with you. And so we had yesterday on Friday, and the iPhone was launching, and then we have earnings coming Tuesday. So this is what you would call an event time. Anytime during an event, just rule number one: you don't want to play. You don't want to play, these max pay and open interest ranges. Number two, if you have to or if you want to still play, you're going to want to pick a side. You're going to want to either pick, playing the put side, which in this case, I'm always going to be talking about selling options. So you're either going to want to sell puts or sell calls. In this case, Apple always has, upside momentum into catalysts and stuff. So you're just going to want to sell these 370 puts. They were the highest all week, and then it shifted up to this 400. So you're going to want to sell these and not do any risk trade over here where it cannot go above. You can sell covered calls and all that stuff's way fine because, you're not going to lose money. You're just going to make less. So that's how you would play an event. Basically, step away, don't play. And here's, all this commentary down here. And that's also why, I don't have the top end range on here because I don't recommend putting on a risk trade on here. There's a few reasons why. Is volume. It could be volume, volatility, momentum. Something can easily power through this. This time around, it wasn't so much volume. 20 million shares today isn't a ton, pretty average. But what you have is more momentum or lack of sellers. Like, remember going to this chart. I don't know, this is a couple week chart. So here's last week, and here was the iPhone event, the launch, or the event, I'm sorry. And so when Apple dipped down. But see how Apple just hung out here? The media or commercial money had an excuse just to hold Apple down and hold it down, sell it off, do whatever, hold it in this, pin it in that 375 range. And, last week it expired right in that max pain range. Well, now, since they kind of wasted their get out of jail free card, in here, well, now everything's been sold off. It's been held down as long as it can. And it's gonna, just like one of those old popcorn making machines, the top is just gonna come off eventually when you hold it down for that long. And so now this mixes with iPhone event, earnings, and it just gets unleashed. And there you go. That's why you're not gonna want to play an event like that. You can come back to the scorecard up here and kind of see real results of if you do. So these oranges are events, and it's really 50-50 odds, but that's not good enough for us. We want higher probability. We want these 80%, almost 100%. Like here, if you would have, I'd have to go back and see what event these were. But let's go with something that's on here. So the rebalancing, when it took place, it would have been fine. You would have expired within that max pain range. Come in Worldwide Developers Conference, you would have been fine again. Down here, you would have not been okay. And so it's hit or miss, and that's not good enough. Skip out on this rebalancing, come play again. Skip out on Worldwide Developers Conference and play all these weeks. So it's better to do that. And then you can see if it expired, if it was the puts or calls that didn't hold and whatnot on this chart. Want to go over last week's video just real quick, showing so Apple it expired last Friday at 369, and everyone thought Apple was going to the toilet and the iPhone was gonna be a failure. On the put side, so this is gonna draw Apple up into this area. And, looking at this chart, and this may change since the weeklies are taking up all the volume. This stays, the same until this becomes a weekly. But a good expiration would be 395. Now, throw in the mix, earnings is coming too. So let's wait till it gets closer. But what's going to happen is this is definitely going to help pull Apple up, plus earnings. So, could be, it'll be expiring anywhere in here. During an earnings event, you're not going to want to, put this as the top because volume can kick in and take it over. But higher we should be going, and also. Okay, so I just wanted to go over that with you, just if anyone didn't see it last week. the options market will show you where the stock will be going. It's because there's actual real money on the line up here. And so Apple was 369 last week, and it was down here, and people throwing up their arms. Or if you haven't followed Apple stock, or if you're just worried, looking at this will show you, just like I pointed out, it will bring Apple up into this range. And ta-da, what happened in 1 week? Apple was down here, it was going to fall off a cliff, and what do you know? It comes over here. So all these are going to expire worthless. And so now let's talk about going forward into earnings. I don't think this is going to hold here. What I think is going to happen, so Apple is already, at 422. It's just been held down for so long. It's growing at 100%, and it has a 15 PE. You just can't hold Apple down for... The floor in Apple is raising and raising and raising, and it will keep doing this. So what's going to happen is this is definitely going to cause some selling. Say Apple comes out with earnings and their stock is 450. This is going to cause, so, Apple may drop down to 435 or something like that, or have a hard time bouncing back and forth. So that will cause a little bit of disruption right here. These closing out, but definitely I wouldn't sell these 420s and where you cannot have it go over. You can sell covered calls all day long or do whatever you want, but I just wouldn't plan on this holding. So it's done everything we said it would. Come up to here. These are going to expire worthless. These, commercial money is just going to have to take their hit on how it goes or hedge it out somehow. And that's about it. So yeah, I'm going to do just like I did last time. Here today, I'm going to put out my earnings estimate, and then I'm going to go with how to get positioned for it. I want to, in this portfolio model here, we already have some covered calls written and some put spreads. So anyways, I'll go through it and on this earnings page and have a little game plan written out for things that I recommend. And yeah, that's about it. So I think earnings will be good and much higher will be going, and have a good weekend. I wanted to add a little trading tidbit at the end of this video. So just strictly trading. Do not trade these huge position sizes where it's going to freak you out. You have to stay calm, so only risk the amount you can lose. And a perfect example is, say, writing credit put spreads. And so, you can go out there and write 100 contracts and all this stuff, and you've been doing great and doing great. Well, there's going to come that day where if it gets close to, like, for example, let's say when Apple was up here at the beginning of this cycle, Apple was up here at 400, which it was. And say you sold these 360 put spreads like I did in this portfolio model. And you do like 100 contracts. And then guess what happens? Apple falls from that 400 and comes down to this 355. So now you're underwater in those things. You're going to be, held liable for all those contracts, 100K on the line or something to lose. And so you're going to freak out and start closing them out, or what do I do? What do I do? And if you're ever doing that, your position size is way, way too big. You need to hold out and know come October 22nd, you're going to be in the right. You don't care what happens all in between. Perfect example is this. It came under here. If you had that many contracts, you would have freaked out, closed them out, and took a loss for no reason, because look where we are now. And it goes to, I have this same real money on the line, sold these 360s, and then I have the 350s sold too. I didn't freak out because I knew what was real. This is all rumor in the meantime causing this, but I knew what the end result is going to be. That's all you care about. So just watch your position size. Don't get them too big. And, I really am doing this model in this Thinkorswim account. So, and the only reason I have it here, you can use more money, less money. I just want to show somebody that what you can do. You don't need, $1 million to make a good percent return. So only if you have $500, we can still make 100% return a year, or something like that. So just wanted to do that quick to watch your position size. If you're starting to freak out, cut down on your position because you want to do it as a stop loss. You want to put this trade on and say, made my bet in the sand and let's go. I'm going to prove you wrong type thing. So, all right, have a good one.